Hey everyone, welcome back to Corporate Decoder. NexMetals Mining Corp, NEXM, just filed their amended 10K for the year ended the 31st of December 2025, and there is a lot to unpack in these financials, especially concerning their ability to keep operating. Quick note, this is not financial advice. Just my take on public filings for educational purposes. This report reveals a company that has significantly changed its financial picture through major fundraising efforts, but the core challenges of funding its mining operations remain a huge question mark. Alright, let's dig into this filing from NexMetals Mining, or NEXM as it is known on the stock market. This is an amended report, meaning they're clarifying or adding to their previous filing. The main reason for this amendment seems to be fixing a few administrative details, like adding a signature from their auditors and including updated certifications from their top executives. Nothing earth-shattering in terms of new information, but it shows they're working to get everything in order. But what we really want to see are the numbers, the financial statements themselves. They give us the real story of where the company stands. First up, the Auditor's report. This is where the independent accountants give their opinion on the company's financial health. They're saying that the financial statements present the company's financial position fairly, meaning the numbers look correct according to accounting rules. However, right away they flag a major concern. Material uncertainty related to going concern. This is a big deal. It means the auditors have substantial doubt about whether the company can continue to operate in the future. They point out that NexMetals Mining has had consistent losses and hasn't made money from its mining activities. They plan to keep investing more money into exploration and operations, but if they can't get enough funding or make profitable operations, they might have trouble staying in business. This is similar to what we saw with companies like Bed Bath & Beyond or Rite Aid, where recurring losses and funding struggles ultimately led to significant problems. Another point highlighted by the auditors is the valuation of units issued to settle debt. This is complex, involving estimations and judgments by management, and the auditors spent extra time scrutinizing it. It shows there are significant financial maneuvers happening that require careful accounting. Let's look at the main financial snapshot, the consolidated balance sheet. This shows what the company owns and what it owes at specific points in time. For the 31st of December 2025, NexMetals had about 39.8 million Canadian dollars in cash and cash equivalents. That is a huge jump from about 6.1 million Canadian dollars at the end of 2024. This jump is likely due to recent fundraising. Their exploration and evaluation assets shot up from about 8.8 million Canadian dollars in 2024 to over 42.7 million Canadian dollars in 2025. This shows a significant investment in exploring and developing their mining properties, particularly in Botswana. Interestingly, their total liabilities actually decreased from about 28.4 million Canadian dollars in 2024 to about 15.6 million Canadian dollars in 2025. This is partly because a large-term loan was settled. But here is the kicker: shareholders' equity, or what is left for owners after liabilities, went from a negative 3.4 million Canadian dollars in 2024 to a positive 82.9 million Canadian dollars in 2025. This massive swing is a direct result of the significant capital they raised, not necessarily from improved operational profitability. Now, let's look at how the company performed operationally, the consolidated statements of operations and comprehensive loss. This tells us about their revenues and expenses. Exploration expenses were high, around 36.1 million Canadian dollars in 2025, up from 29.7 million Canadian dollars in 2024. This is expected for a mining exploration company, but it is a lot of money being spent. Investor relations and communications expenses jumped dramatically from about 363,000 Canadian dollars in 2024 to nearly 5 million Canadian dollars in 2025. This often signals a company trying to actively manage its public image and investor relations, perhaps in conjunction with major capital raises or market changes. The net loss for the year was a staggering 59 million Canadian dollars in 2025, compared to 42.4 million Canadian dollars in 2024. So despite raising a lot of money and investing heavily, the company is still losing more money than ever. This is a key reason why the auditors are flagging the going concern risk. You can see that here. The net loss for the year is $59,086,325 for 2025. Let's move to the consolidated statements of cash flows. This shows how cash moved in and out of the company. Operating activities used up a lot of cash, about 47.6 million Canadian dollars in 2025, up from 37.6 million Canadian dollars in 2024. This confirms that their day-to-day operations are bleeding cash. On the flip side, financing activities provided a massive influx of cash, nearly 120 million Canadian dollars in 2025, compared to 25.3 million Canadian dollars in 2024. This is where they raised the money to cover their operational losses and fund their investments. It is clear that without this financing, the company would be in serious trouble. The notes to the financial statements are crucial for understanding the details. Note 1 reiterates the going concern issue. It is quite explicit, stating that the company's ability to continue depends on profitable operations and securing adequate financing, and that the material uncertainties cast substantial doubt. They mention a public offering in November 2025 that provided capital for immediate needs, but more funding will be needed for further development. This is the central challenge for NexMetals Mining. Note 2 points out that the company's presentation currency is Canadian dollars, but they deal with USD and BWP Botswana Pula in their foreign operations. They also explain a significant share consolidation that happened in June 2025, where 20 old shares were combined into one new share. This makes past share numbers look different, so it's important to remember that for comparisons. Note 5 breaks down their exploration and evaluation assets. A huge chunk of their spending went into the Celebi mines and Selkirk mine in Botswana. They made a second installment payment of about 34.4 million Canadian dollars for these mines in late 2025. They also mention an impairment loss of over 500,000 Canadian dollars related to some deposits they decided not to pursue. Note 10 is about a term loan that was fully settled in March 2025 by issuing shares and warrants. This was a significant financial transaction, effectively converting debt into equity. The details of how these units, shares, and warrants were valued involve complex calculations. Note 12 details their share capital. They had two major financing events in 2025, a private placement in March and a public offering in November, which brought in a lot of cash. The November offering alone grossed about 80 million Canadian dollars. This explains the massive increase in cash on their balance sheet and the positive shift in shareholders' equity. Looking at share-based compensation, the schedule of option activity shows they granted many new stock options in 2025, with an average exercise price much lower than previous years. This is typical when a company raises significant capital, often used to incentivize employees and management. Note 13 is always interesting. It details transactions with related parties, which often include major shareholders or executives. We see significant transactions with entities like EdgePoint Investment Group, which seems to be a major shareholder. They converted a large loan from EdgePoint's affiliate into shares and also participated in new equity offerings. This level of related party activity, especially debt conversion into equity, is often a sign of financial strain or strategic restructuring. Note 17 focuses on income taxes. Effectively, the company has so many accumulated losses that they have a deferred tax asset, but they have to put a valuation allowance against it because it is unlikely they'll generate enough profit in the near future to use those tax benefits. This reinforces the going concern issue. They are not profitable enough to utilize tax advantages. Note 15 breaks down their operations by geography: Canada, Barbados, and Botswana. Most of their assets, especially exploration and evaluation assets, are heavily concentrated in Botswana. This makes them very exposed to the political and economic risks in that country. Finally, the signatures, including those of the Chief Executive Officer and Chief Financial Officer. They are certifying that the financial statements are accurate. So, what is the story here? NexMetals Mining Corp has managed to raise a substantial amount of capital in 2025, significantly boosting their cash reserves and balance sheet. This allowed them to make significant investments in their mining projects and settle a major loan. However, the core problem remains. They are still losing a lot of money from their operations, and the auditors are seriously concerned about their ability to continue as a going concern. This is a classic pattern for junior mining companies that rely heavily on fundraising to fund exploration, hoping for a breakthrough. The huge jump in exploration assets and the massive financing are the big numbers to watch. But the increasing net loss and the auditor's going concern warning are the critical red flags. It really boils down to whether they can turn these exploration investments into profitable operations before they run out of cash, or if they'll need even more funding rounds. What I am actually looking for is a clear path to profitability, not just more cash inflows from financing. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.